The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of AKERS Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Welcome to Winning in Retirement. I'm your host, Brian Akers from AKERS Financial Group. I'm president and founder of AKERS Financial Group. Here with me this week is Paul Franco. Paul Franco is a financial advisor with us at AKERS Financial Group, and we welcome him to our show. Good morning.
Good morning, Brian.
How are you doing today, Paul?
I'm doing great. How about yourself?
I'm doing all right, I think. Some mornings take a while to get going, but then after you get going, it feels pretty good.
Yeah, that's basically what every morning is, right? It depends on if it's 4 in the morning, 5 in the morning. Who knows what time it is?
Not every morning. Some mornings are even worse, like you just real slow start. Of course, some mornings you're ready to go, ready to run. When it's show time, it's time to run.
Yeah, today it's ready to go. We're ready to go.
Yeah, so the hardest part is I had to put together a show for us today that's something pressing on my mind a lot recently. So I want to make sure we say it the right way and cover things because we want to make sure you understand the difference. Because the day show is when we call it advisors who solve versus sell. And we want you to understand the difference between an advisor that solves versus sell. This will be a show where we bring up what we've been talking to clients about the last few weeks. I have a list of questions that we've been asked.
Yep.
We've been in meetings talking with people and dealing with their issues with our goal to be the advisor that solves versus the advisor that we see that's been trying to sell to each of these people.
Right. And we get a lot of clients who come in that ultimately have been sold something. And so that's a problem in our opinion. And ultimately, what I like to tell people is that if somebody's coming in with a certain product right away without even getting to know you, without asking what your goals are, what your time frame is, all that, then that's immediately a red flag.
Yes, at AKERS Financial Group, we have a show called Winning in Retirement. We want you to win in retirement. We want you to win in retirement. That's a goal. To me, that's being a fiduciary. What's best for you? Always seeking what's best for you means we have to listen. We have to have a process. We need to truly understand the client to be able to say, well, this is right. Then AKERS Financial Group, we're an independent financial services, so we can provide what they need rather than having one product or one thing that the person sells all the time to everyone that walks in the door. The difference is advisors that solve versus advisors that sell. That's hard.
Yeah, I had a client just last week that came in and said, and this was for a first meeting. He actually listens to the radio. He came in and he said, I walked into my local bank branch and they said I had so much money in the bank. They wanted me to meet with a financial advisor there. Without even getting to know what his goals are, with what his retirement time frame is, with what kind of money he should be investing, they tried to recommend just an annuity to try to. I guess I don't have a good answer for it, and he felt like that was a little bit weird. And I said I 100% agree with that. They didn't ask any questions about getting to know you, anything about what makes you unique versus anybody else, and so that was an opportunity for us to be able to help. And that's why our goal is to be somebody's advisor, not to be a salesperson. I always like to say, I'm not a good salesperson. I'm not. Internally, I'm not a good salesperson. But what we are trying to help people do is be their advisor. That's what our goal is.
So when you take the situation of the client, understand them, it comes down to a logical answer. And then the thing is, what are the choices that are out there? Then it comes down to a logical answer.
Right.
Then it comes down to how do you want to implement it and what risk you want to take. And it comes to a logical answer. And to me, that's planning. It's not, you don't really have to say, well, let's buy this one thing. It's more about, well, what do you need? What fits? And deal with it that way. So what I want to do today is I'm going to read a question. I'm going to talk about, first of all, a client that you and I met with. And I'm sort of talking about the situation and just how do we treat it differently? So the first question was this. They're new clients, they're early 40s, doing what they think is best, but missing the mark in the overall planning. Do you remember that meeting we had?
Yeah, I do. Yeah, and that was a comment they made as well. We think we're doing the right things, but are we missing the mark in our overall plan?
Yes, they've been online searching and Google searching. And the thing is, when you search based on what's in your mind. Mm-hmm. And so you find answers tied to what you search for. Yeah. And then you get those answers and you say, oh yeah, I'm doing okay in that one scenario. But I guess the hardest part in the meeting was the fact that there's a lot to financial planning.
Right.
And then people, even if they think they're conservative, doing it the right way, they don't really understand every aspect that needs to be done to make a good financial foundation for planning or any of that.
You're exactly right. And that was sort of the issue where when we're looking at that, it's like we're trying to look at their fingerprint, what makes them unique versus anybody else. And they didn't really even have the basics, Brian. They didn't have an emergency fund. They didn't have will, power of attorney, healthcare directives, any estate planning documents. We weren't saving enough. And so those were all those ideas where it's like, yes, we have these big goals of retiring one day. In that situation, they want to help put their kids through school, which was very important as well to them. But we need to get the fundamentals right first.
Yeah, so the best thing is they got referred to us, and so they came with a referral knowing that they needed help and they needed to go somewhere. And so we tell them at the very beginning, we'd love to be their advisor. We need to talk about their situation and give them examples of how we could work together, and then develop a meeting and try to come up with ideas. And that first meeting is a free meeting we have for anybody. As we talk on the radio, we invite you to call us at you can go through our website, AKERSFinancialGroup.com, or call us on our phone number, where we can actually meet with you with one of our team of advisors about your exact situation, and then develop what is the answer.
Yep.
It's more rather than we have the answer already. Here, buy this.
Right, and that's immediately a red flag. We have to get to know you and get to know what makes sense in your situation.
Yeah. So the idea of missing the mark in financial planning is the fact that we sort of go, and we might be in our 20s and we just go, and all of a sudden we flew by the 30s. All of a sudden you're into the 40s, about halfway through your career, and it's like, well, when do I get serious about planning? People ask us the question, like they come in our meeting, when's the best time for me to come in? I said, well, we can't go backwards.
Right.
So today is a great day to start. No matter what age, people starting is a very, very important thing, is to get started right now.
Right. We can always look back and say, well, I wish I would have got started earlier. We can always look back at that. But the reality is that we can start today. We can start now, especially somebody in their 40s. They're starting to hit their peak earnings in their lifetime. And so there's an ability that they can do more. And that's very important.
So the idea is that advisor comes with the word advice.
Yeah.
And advice comes only through proper information. Now, the second thing I'm going to bring up is a person that called in who's a career government worker. And then, of course, they've been offered different options when it comes to retirement planning and what they should do. And they have certain deadlines they got to make decisions on. And so we had a phone call. Brand new person, never met with them, but they wanted to figure out what to do right away. So I just went through the mindset of where they are now and talk to them about what planning does to make sure they're okay, make sure they are financially independent, and then from there, how to develop a plan to a point where they can say, yeah, I can retire.
Yeah, that financial independence is so important, especially like in that situation, a career, a government worker, in any sort of situation where there may be any sort of job uncertainty. We need to have a plan in place for if you were laid off today, or if you were to retire today, and know where the income's going to come from.
Yeah, these. I was explaining to her about a worst case scenario. Worst case scenario is if you take this deal or not take the deal, you end up getting fired, or they call it a RIF, which is a nice way.
Sure.
What happens, and are you okay? And that's what planning does, is to figure out if you're okay and what to do next. And so the idea is understanding planning, helping lead to a decision with a tight deadlines. We do this a lot. We've done this many times throughout the years, all different situations, from hospitals to private companies to people who have the options to leave early, severance packages, all kinds of things. And so we work it through the plan, see what fits your scenario, and see if you're ready. Are you ready to retire? Right.
And it helps that we are experts in that world of government benefits and being able to help people through those.
Absolutely. Now, a third one I would bring up is an unsure investor. We never get these, right, Paul?
Oh, my goodness.
I think you actually got this call. It was actually an existing client.
Well, this is quite a bit we get this.
But this guy, he called in and just was worried about the news. The market's up and down, like the market always is. And then the question is he okay? And then I think you went through the process of what we did in the plan was took a very low risk approach.
Correct. So that was a whole idea of when you read the news and you see a lot of and you can click online, click through anything, and different volatility, they're trying to get these clicks. And that's so important that they're trying to scare you. And that's what I tried to explain. And there is volatility in the market, and that's normal. But when in his situation in particular, we had such a good plan in place to have the right level of protected assets, protected that cannot go down with the market, and then balance that with some money that's invested in the market, albeit taking lesser risk than the overall market. So when we looked at his overall portfolio, he actually was really sound, and we only had to make a few tweaks on just some existing cash, what to do with that. And so that was a really good conversation we were able to have.
Yeah, so what happens is that he made the call, and we were the existing advisors. He was unsure, and so he made the call to the office. And as an advisor, we answer the call and we talk through it. We have teams of advisors to answer the calls. It might not always be the same person, but it is somebody who can walk through where you are and what's going on. As a company at AKERS Financial Group, we have an investment committee every week where we talk markets, talk about how to approach what's going on each and every week as things keep changing, and understanding what would be our response. One of the common things we're doing right now is just understanding that we need to be diversified. We need to have money that's protected from loss and money that's invested in the market and diversified. You can't put all your money in one place. You need to invest your money based on your scenario for a lifetime. All very, very important to make sure that we can give the right advice. So we want to be your advisor. We want to be an advisor that solves versus selling. That's a very key thing, right, Paul?
Yeah, anybody who's selling something, there's really an issue, especially when it comes to building out an actual plan. When you actually build out a plan in place, there isn't like you come into us for a first meeting and here's the product we want to sell you. We're going to squeeze you into this life insurance product, or squeeze you into this annuity, or squeeze you into this strategy. That's not what it's about. That's a red flag to us. We want to get to know you and make sure we're building the plan out for what your goals are.
All right, so I should say, AKERS Financial, we're not going to be squeezing you into things.
Correct.
No, actually, AKERS Financial Group, we're designed to be an independent financial advisory firm. We're designed to be that local, that person that's independent, that advisor that's there for you when you need us most. We don't report to a big company on Wall Street. We don't report to a company of Iowa. We report to you. That's the key thing. We have offices in Forest Hill, Lutherville, clients all around the Mid-Atlantic region and all around the country, and even a few around the world. It's so easy to begin winning in retirement. All you got to do is give us a call and schedule your meeting with one of our team of advisors by calling 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call on Monday to schedule your free in-person meeting. Go to AkersFinancialGroup.com or call us at 833-946-7384 to start planning for your retirement now. Who should you call when making financial decisions? We'll talk about that when we return.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers from AKERS Financial Group. Here with me today is Paul Franco. We're both financial advisors from AKERS Financial Group. Independent financial advisors, we like to say. As we start the second quarter of the show, we want to remind you that our topic is advisors who solve versus sell. Advisors who solve versus sell. And our question for this quarter is, who should you call when making financial decisions? Paul Franco, there's the question. You get to answer it for me.
Yeah, it's so good. We want to be one of the first people you call when it comes to making those big financial decisions. And we don't always see that, Brian. We see, it's funny. It's like almost if we're just on the list, it feels good to be on that list because the decisions that you make, you might not think it's as big a decision. It has a drastic impact on your financial situation. And so the reality is that we want to be there to help guide you. We want to be there to help answer that question for you. We want to be one of the first people that you call.
Can you imagine that there's a lot of people out there working with financial people, and they have a financial question that they don't even think about their current investment person, their current insurance person, as someone to call.
Right.
So that would actually tell you how you see them. You see them more product or salesperson rather than being an advisor that you can trust to give you the fair answer that's needed for you and your family.
Yeah, and that's a big red flag. That's a big issue when you don't feel like you can call your financial advisor because either they, they're going to talk to you about a specific product or a specific solution and not give you just unbiased, correct advice, in my opinion.
Yeah, I mean, the hard part is the conflict of interest. That's where in financial businesses, you have to disclose how you get paid. And there is a conflict of interest anytime there's transactions going on. So the idea of a financial planner that charges fees, yes, they're going to charge fees for advice, and they'll charge fees based on what they can do. We design independent firms so we can try to do as much as we can for people based on wherever they're at. Now, and what we try to do is design a plan that fits their situation and understanding that we want to be on that team of people that you call. We don't have to be the only one, but we want to be the one you call because you have put that trust in us to be your advisor. And if we had to say what we asked for, we'd love that to be the relationship we have, is to be the advisor, to be almost like the chief financial officer inside of your business, which is your own personal life.
Yeah. And that's the beauty of being our clients' advisors, that they do come to us. They ask us hard questions. Hard situations happen in life. That always does happen, different changes that happen. And so it does mean a lot for us to be the ones to help guide them. It could be a spouse passing away. It could be they just lost a job, and there's a financial burden that's on top of that, and we want to be there as their guide and as their advisor. And we do that for a lot of our clients.
And I have one of my questions today, I have number 4, is actually a client that actually met, and we're going over like the reasons that she came to meet with us and what's happened over the last couple of years. The idea was a widow with a nest egg, and that nest egg is to be preserved as a family legacy, a family inheritance. But then she also needs to take money from it. And so there's this whole concept of how do we provide for her and provide for the family, and what's a reasonable withdrawal rate. And the hardest part is that this is very little thing to do with financial planning, except for understanding the client and where she is, and giving her permission to use the nest egg of money.
Yeah, and how did you handle that? Was that a conversation about trying to work through expenses and how much do you want to leave to family, or how did you handle that, Brian?
It all starts with the expenses, right, with everybody, and understanding what she needs. Now, what she needs, we have money for some of that, but not for everything. And so it started out with the idea of what's your budget, or what's your money that you need. And then we have sources of funds. And then the portfolio, the nest egg, would need to start paying interest out next year for her, because she had another income that ends in 25, and in 26 we got to start using at least the interest and dividends. And I showed her what the numbers were for the last couple of years, and that's more than enough to meet her needs. So basically, I explained my milking the cow. That's where I went with it, and how we're milking the cow, and that we're preserving the nest egg there, but using some of that money you're already paying tax on. Because the reality is that when you let portfolios reinvest on a taxable account, you're paying the tax. The portfolio is not paying its own tax.
Right.
So we got into the conversation of let the portfolio pay its own tax, use that money. And then we got into the idea of gifting now while she's alive. And so the idea of the money's for legacy anyway. That legacy could be given now to help those in need, and equally across in her case, she had four children that we could give money to.
Right. And so that's a balance of that situation of income planning, cash flow planning, but also in estate and legacy planning, and all in one.
And that answer came from 2 years of meeting and working, not from, hello, how you doing? Here's your answer.
Right.
What happens is we have wealthy and ultra-wealthy clients. The idea is, well, what is the right answer? What is the right answer on gifting? What is the right answer on preserving wealth, trying to do a good estate planning? And then the idea of if you let your wealth grow too high, there's extra taxes from Maryland inheritance tax and estate tax and things like that you got to watch out for.
Yeah, you have to. I always say that when we do investment advice, when we give investment advice, there's always some tax implication to that. So if your advisor's not working through tax planning with you, that's not a good advisor. You need to be doing tax planning. You need to be making sure you're making the right decisions because those taxes can have a drastic impact now and to the future.
And that leads to question number 5 is a client called in and says, I'm going to retire, and where's my money coming from? Where am I going to get the money? How do you answer questions like that when people call in and they give you that just blanket, well, basically almost like they've started that panic mode?
Well, that's the bare bones of retirement planning is, hey, I've got this income. I've received this income my whole life, every 2 weeks, every week, however often you get paid. How am I going to continue to get my paycheck in retirement? That's the big first concern when you do retirement planning.
How can I trust it? Now, there's this idea that there's emotional and rational, right?
Yeah.
And I think we were told by one of our business consultants over the years that if someone's emotional, you really can't answer emotionally back to them, and you won't get anywhere.
Right.
It's almost like a family argument, right? You don't really get anywhere. And if you're trying to be rational with the answer, you have to calm them down to a point where they're able to listen at a rational level to really understand that it's going to be okay to retire, and it's okay to use the money, and this is exactly how it would work. And then I found that over that first year, the 2 years, they begin to finally breathe and relax and understand, yeah, you're right, it works.
Right. And I actually had that with a client just recently where it was about 6 months after, hey, here's what the flow of income has been. He's consistent. He's getting his pension. We're waiting for Social Security. The investment flow is exactly where it needs to come from. We have principal protected sources receiving income. And so that was a conversation we were able to have of, hey, I feel really good about this. And so it's like, it's one thing for us to show you on paper, you're going to be okay, and here's where the money's going to flow from. And then to actually do it and actually implement that plan, it feels incredible for our clients.
Yeah, the hard part is understanding that you're okay.
Right.
You're greatly okay. It's a really big deal. The thing with these questions that I'm bringing up is the idea that advisors who solve versus sell. So what's their first response? Is their response going to be, oh, you want income? Oh, let's buy this. This will give you income. Or is it rather, okay, well, what kind of income do you need? When do you want it? Okay, this is what we already have. How do you draw it from there? What's the taxes on the IRA, the Roth IRA, the money that's in your personal account, the money that's CD? What's the taxes on all of those things? Make sure you understand how it all works together, because it truly all works together, and that's what's exciting for us. All right, question number 7. This is it. There was a call, actually number 6, a call about taxes and why they owe so much in retirement.
Oh, no.
You ever gotten that call?
Yes.
Yeah, this is the call I got. It was a little crazy.
Well, you tell me the story then, Brian.
Well, it's just they called and they said, well, I owe like $7,000. How did this happen? And we went through it, and the reality is that that year of retirement's a very expensive year. And then the next year, you're on your own with pension and interest and dividends and all that. Yeah. And in their portfolio, they had a lot of interest, a lot of dividends, but they weren't paying quarterly estimate taxes. The Social Security wasn't taking tax out yet. There's just all these little things that still had to be done to make sure we paid in enough tax throughout the year so they wouldn't have to write a check.
Right.
The writing the check was what freaks people out more than everybody loves to get a refund, but the idea is that they owed money and just had to find the money.
Right. I had that situation recently where we had a year where we had HH bonds that matured last year. We had HH bonds that hit their 20-year maturity. So all that accrued interest we had to pay in 1 year. And then ultimately, they had trust account that had higher interest rate environment. So that was all paying higher dividends and interest. And so the interest on that, we had to make sure that was planned for taxes so that was accounted for. And even still, after all that tax planning, what happened was we still owed a little bit. And so it's like what we like to do in tax planning is if you want a refund, we want to get you a small refund. That's the goal in tax planning. Some people like getting a refund. Some people like owing. And so we want to help work through what you want in your tax situation.
And so that is about getting information, getting the last 3 years return, understanding that if we find anything wrong with the last 3 years, you can amend it. But that's part of the planning. That's why we do Definitely. 3 years, so we can understand trends. Also, make sure we have all those things in the tax estimate we try to run. And then do the best we can to estimate the interest in things, and maybe you have to review it again into the year to see if we're on target or not.
Yeah, I love running a tax estimate right around October, November to have a very good feel of what the income's going to be.
Especially those that that becomes a big deal because they might have personal assets that have a lot of taxation, and they got to watch capital gain income and things like that.
Yeah, absolutely.
Because if you invest in certain ways, they'll actually kick off more income than you plan sometimes. If you watch,
and you get the surprise tax bill at the end of the year, and that's never fun.
No, it's not. The idea here is this: advisors who solve versus sell. And basically, what do you have? Do you have an advisor? Do you have an advisor that's there that you can call? Is that who you call when you have a financial decision to be made, or do you not call? That's a tough question, but that's what we're doing the show about, is understanding that. It's great to have an advisor that you can call and run these questions by them, and we're giving you some samples of questions that we get. At retirement, the best part of retirement is getting your time back, where you decide how to use it. Before retirement, your time is tied up with other commitments, mainly your job. A lot of that goes away in retirement. Your time is now consumed by things that you want to do. It's so easy to begin winning in retirement. Go to our website at AKERSFinancialGroup.com, scroll to the schedule a meeting section, and let us know you'd like to schedule your free consultation with one of our team of advisors. That's AKERSFinancialGroup.com, or you can call us at 833-WIN-RETIRE, 833-WINRETIRE. We'll give you a call on Monday to schedule your free in-person meeting. Go to AkersFinancialGroup.com or call us at 833-946-7384 to start planning for your retirement now. When you call your advisor with a question, do you want an answer or a sales pitch? We'll talk about this in a moment.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I am Brian Akers from AKERS Financial Group. I'm the president and founder of AKERS Financial Group, and this show is put on by AKERS Financial Group, and from AKERS Financial Group is Paul Franco. Good morning, Paul.
Good morning, Brian.
It's the second half.
Second half now, man.
I always like saying good morning. It's like, let's get started again. Let's go.
Yeah.
These quarters are fun because it's like you get your little break, a little orange juice, and you can get rolling again.
Yep, that's exactly right. It's second half, so it's go time now.
All right, so the show today is called Advisors Who Solve versus Sell. And solve, is that the right way to say?
Yeah, solve versus sell.
We don't say salve, that'd be bad.
Yeah, not
solve.
salve. We want to solve versus sell.
Yeah, so solving issues, the key thing is truly understanding where people are so that you can bring the answers to come alongside and solve the problem over time.
Correct.
Now, we've covered in the first quarter about that. Second quarter, we covered about, well, who do you call? And that was a good question. And basically, we don't say Ghostbusters here. We say AKERS Financial Group.
Call us at AKERS, yep.
And then the third thing is, when you call your advisor, what do you expect? Let's say you're calling your advisor with a question. Do you expect an answer, or do you expect a sales pitch?
Yeah.
And are you a little leery of your phone call to your current advisor?
Right. And that leeriness is not a good thing. And so that's why we want to be the advisor, and we don't want you to be working with someone who is just trying to sell you something. That's not a good thing.
Yeah, because imagine let's say you have a question, but if you call, they're going to try to talk you into something else, and you just don't want that. And so basically you avoid that. And so the question would be well, then who do you call for your answer? Right.
It's like almost like, there's a lot of different examples you can use of that, but it's like going into like a TV store and you want this certain TV, and then they're trying to sell you on something else that's much more expensive, a lot prettier, and it's like, no, I don't need that. That's not what I'm looking for. Yeah. That's how I can relate to it, but it's like that's not a good thing.
Yeah, or you go to a restaurant and they have specials.
Yeah, right.
And like, the specials sound good, but they cost a lot more. And you know that they want you to buy the special. They have a bunch of it that day. Mm-hmm. I always like a discount. So.
Right, exactly. And so that's like, if they're trying to, I've said this word a lot, but squeeze you into something, that's not a good thing.
Yeah. So the idea is this: advisors who solve versus sell. Now here's question number 7. This question is one that you had in a meeting, and that is, should I keep my simple IRA or should I switch to a 401k?
Yeah.
This was a small business owner. How do you go about answering a question like that? Where do you start?
Yeah. Well, big thing is, I want to see the cost difference between the simple IRA and the 401k. So the proposal from that payroll provider in this situation. Now, I know I just know that 401ks are inherently more expensive than simple IRAs. Just with maintenance, they might take a certain percent of the assets in that plan.
Right.
Whereas the simple IRA is a lot cheaper to maintain. And in their situation, they only have 3 employees. And so that's why I recommended them set up the simple IRA. But when this payroll provider said, hey, we can flip you, per se, that was the word they used, flip you to a 401k, that should have been an immediate red flag. But what was a great thing, Brian, was they sent me an email, they gave me a call, and that was something I was able to help guide them through. Where we're at in that now is like, I want to see the proposal to get the definite answer, but to be that person that they can call and get trusted, unbiased advice means the world to us.
Yeah, the key thing is you set up that simple IRA, and then the payroll person's doing the payroll, but they're trying to add on another sale.
Correct.
And that add on another sale is sliding in a 401k in a very small company.
When it's not the best thing for them, which is frustrating.
Oh, and the hardest part is 401k versus simple is all about structure.
Yep.
Simple IRA is simple with the word simple. It's designed to be a simple setup. Many times a small employer can put money in. There's no discrimination testing.
Yep.
And you put in the maximum, and you don't have to worry about what the employees put in. You put a 3% match on it, and you're done. The 401k, as soon as you have a 401k, all of a sudden you have to worry about discrimination testing, and you put in so much money compared to the couple employees you have.
Right.
And you end up not even putting money in.
Right. And there's certain tax credits you can take for setting up a 401k versus setting up simple IRA, but we can look at the situation and say what is best for our client. And so we can help guide them through that.
But in that situation, when there was a tough question, they called you.
Correct.
Even when someone on the outside is trying to sell them something new, they come back to the advisor, which was you in this situation. Now, number 8 is, when do I start as a trustee for my special needs sister? And so the idea was, in this case, was the client's father, who was a trustee, passed away. And now, immediately is the answer, is when she became the trustee of the Special Needs Trust and needs to do what's needed, all the responsibilities of helping run a Special Needs Trust. It's a little confusing because she was an executor, she's a personal representative, she's a power of attorney, and a trustee.
Wow. Yeah.
All these are the same person. And then the hardest part is that now she is that trustee for her sister, and she has other rules she has to learn about a special needs trust, which we do many times for family members that need that extra security of assets set aside so they can maintain benefits that they're receiving.
Yeah, and you're able to help guide her with here's what the responsibilities of an executor of an estate are. Mm-hmm. Here's what the responsibilities of a power of attorney are, what a trustee is, because they're all different rules around those. And so that can be overwhelming. In that situation, I'm sure it's overwhelming to have all these different titles that wear all these different caps. And so, Brian, you're able to help guide, and we're able to help guide somebody in that situation to here's what the responsibilities are.
Yeah, this next one, number 9, is going to be about, do I really have to take money out of an inherited IRA? And the sad part is, if you're the beneficiary, you might feel like the broker is just saying, oh, here, take this money, pay your tax. And they might not even tell you about the inherited IRA option. Then they come see us and they say to us, oh, I'm getting an inheritance. And we go, what kind? And then we walk through choices, and we walk through the idea of an inherited IRA, and then we're able to control taxation through use of inherited IRAs.
Yeah, and that controlling of taxation is what's so important. We can spread out the tax liability. If somebody passes away post-Secure Act, post-2020, then what happens is you have a 10-year period that you have to liquidate those IRAs, those pre-tax IRAs that are taxable. And so, yes, you could take that as a one-time lump sum and to get the cash, pay all the tax in 1 year, or we can be specific in our tax planning on how much should we spread out each year to help spread out the tax liability. Yeah,
I had a call actually from an attorney just asking about what happens when she thinks an advisor is doing the RMDs wrong. And so like basically the advisor had skipped the 24 inherited IRA withdrawal. And the answer was that not a big deal. It wasn't required.
Yep.
But 25, it is required. You have to start taking withdrawals out of inherited IRAs, if needed or not. Inherited Roths, you don't, but inherited IRAs, you do. All right, number 10, you get a call and it's asking what to do now about beneficiaries that were not changed before a person's death.
Uh-oh.
Yeah.
That's a sticky one.
Yeah, well, this was hard because it did involve two sisters and then a third sister that was supposed to be going to a trust, and it did not go to the trust.
Okay.
And so we got to walk through with an attorney, get a team of people together to get the right answer in that situation, leading to possible loss of benefits for a special needs person because of the fact that beneficiaries were not set up right.
Right. So here's how to learn through this. Make sure your beneficiaries are set right.
Yeah, I got called in like after the fact, and it's like, all right, I can give you what the answer is, and you're not going to like it. And what we can work on a way around it somehow, and we will see what the detriment is to that person who basically. The beneficiary wasn't set up right.
Right.
So the thing is that don't assume your beneficiaries are right. Get a copy, make sure they are right. One piece of advice, if it's a IRA, you want to make sure you list the people out. And then the third thing is if there's an attorney involved, let the attorney give you the actual verbiage of what you want the beneficiary to say.
Yeah.
And write it out what they say and put that down. Now, in this case, this was one thing where the advisor said, oh, yeah, I got it, and never did it. And if the fact is the client passed away, and all of a sudden the attorney calls us saying, something's going on here, I'm not sure the options we can do.
Yeah.
So it's just a tough situation, but what we can do and learn from it is that everything you need to check your beneficiary, wherever your money is, check your beneficiaries, getting in writing. Anytime anything changes, account number, the address of the home office, the advisor, the company, get another copy of your beneficiaries. Check your beneficiaries. Have a folder with all of them put together.
Yeah, and that's a legacy in and of itself, is having your documents, your wills, your power of attorney, your healthcare directives, having beneficiaries set up how you want to make it easy down the road for family.
All right, just then question number 11 was a person called in and says, I'm worried about the market. Do I have all my investments in the right places? So let's call this an existing client. How do you answer a question like that?
Well, we want to make sure, if you're an existing client, we have the right balance. We balance having risk in the market, volatility, albeit taking lesser risk, and then we have money that's protected. And when I say protected, I mean principal protected, cannot go down with the market. And so when you read your statements and you're reading your statements and you're like, wow, I lost 5%, 4%, 5%, 6%. And what we want to do in that situation is take a look and say, okay, how about in your overall portfolio? Like an example would be 2022 and the market's down around 25%. Yes, we had some money in the market, just taking lesser risk that didn't lose as much as that. And that's a good thing, but it still lost with that portion in the market.
Right.
And the money that was protected did not lose anything. If anything, it might have even gained some of the interest. And so when we look at an overall portfolio, we can say, yes, we want to be able to say, yes, your money is allocated in the right place. This volatility of the market does not affect you like you might think it does.
You're right. And to reassure is what a good advisor should do for existing clients on the plan that we've done, the work we've done in the past. The hard part is when you get a phone call and you don't know where their money is invested. Did they invest with a purpose? Did they apply it properly? And that's really what we do at AKERS Financial Group. What we do is we sit down and talk with you about your situation. We do call that your financial fingerprint. But we love the job of working with you about your situation and applying it to your financial life, getting your foundation of your finances in line with your wishes, and then implementing this plan year by year to make sure it's all working the way you want during the good years and the bad years, so that when something goes wrong, you can say, I'm okay, because I have things handled by AKERS Financial Group. They're taking care of this, and I feel okay about it. Then you can call us and ask, why should I feel okay? And we'll go over why you should feel okay.
Right, exactly.
This has happened throughout my career, these moments of life when things pull down. You have to have portfolios before it pulls down ready for this. When's the best time to check on that? The answer is right now.
Right now, yeah.
So AKERS Financial Group, we invite you to sit down with us with a free meeting with one of our team of advisors to go over your exact financial fingerprint, and so that we can apply it to you and how to make your retirement a winning in retirement experience. So give us a call at 833-WIN-RETIRE and schedule a free in-person meeting with one of our team of advisors. Or go to our website at AKERSFinancialGroup.com. How do you know you've outgrown your financial advisor? We'll talk about that when we continue.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers from AKERS Financial Group, and here with me today is Paul Franco, MBA Paul Franco, financial advisor Paul Franco. Been with AKERS Financial Group for more than 8 years, working with our clients and assisting them as their advisor.
Not MBA, MBA.
Yeah, the NBA didn't work out for you.
No, not unfortunately. I was too short and too big.
More of a soccer guy.
More of a soccer guy. That's right.
Yeah, you had to turn down the big leagues, but you're all right.
Yeah, that's right.
You went professional in financial planning.
That's where I wanted to be, so that's good.
Yeah, so the idea is this. We're doing a radio show today, and that radio show is called Advisors Who Solve versus Sell. And we're explaining how AKERS Financial Group works with questions and things that clients call us about. And guess what? These are actually questions from the last couple of weeks. These clients called in with these questions, these concerns, and these are things that we had to handle. Does your advisor do this? When you call your advisor, do they have the most recent product, today's hot topic to buy? Or like is today, I was going to say Chalupa Day or Empanada Day. What is today?
Taco Tuesday.
Taco Tuesday. I'm sorry, that's very funny. What are you getting when you call? Right. Do you even call your advisor?
Yep.
So this topic in the fourth quarter is, have you outgrown your advisor? And if you think you have, how do you know? And what do you do now?
Yeah, that's a loaded question, because I do get a lot of clients, I know you do too, Brian, of ones who come in that maybe have an advisor that they had before, or that they're trying to see if they're really giving good advice.
Yeah.
And we can generally ask a few questions and say, well, here's the situation. You're showing me the plan here. Well, have we looked at taxes in retirement? No, my advisor hasn't talked to me about taxes. Well, that's weird. Is our money truly protected? We know we're going to retire soon. I need some money that's protected. Have they talked to you about that? No, not really.
Right.
And so the reality is that if they're not asking these key questions, tax planning, estate planning, income planning, retirement planning, insurance planning, all these parts, then maybe you have outgrown your advisor.
I like when we get a radio listener calls for a meeting. They come in, and in that first conversation, they say, you talk on the radio about topics my advisor has never mentioned to me. Right. And I really feel I need a review to see if any of these things apply to our situation. And I said, that's exactly what we want to do, is get across the point that advice is taking all the aspects, all the ideas of financial planning and applying it to you.
Right.
There isn't a book on a shelf that has every answer for you. There isn't a search engine where you can get every answer for you in one place. Having the valuable advisor alongside for now and for the future can help guide and help you answer all the questions that are needed to reach all of your goals. Very, very, very important. So on to our questions. Number 12 is, where's that paper? Some piece of paper. There it is. This is what is truly safe in an investment environment like we always have, you know?
Yeah. And we do get that a lot, especially in volatile markets, is what is truly a safe investment?
Yeah.
And so that's a really good question, because some brokers like to say that bonds are a safe investment. While they do take lesser risk, I would argue that they don't take no risk. And so that's not a truly principal protected safe investment. When I like to say somebody's investment safe, I want it to be principal protected, backed by FDIC insurance through a government, or backed by guarantees of an insurance company, a high quality insurance company. That's the sort of principal protection I'm talking about.
Yeah. So bonds, when you're talking about bond risk, I think you're mentioning like bond mutual funds probably have the most risk because they don't have a guaranteed maturity. Individual bonds, between the date you buy it and the day it matures, there's risk of selling it.
Right.
You can sell it for more than you bought it for or less, depending on what's going on.
Right. And there's credit risk with bonds. And ultimately, that's why even in the bonds we use in our portfolios, we like to use treasury bonds. And you can argue the safety of the U.S. government. Sure, anybody can argue that, but it truly is. That's a safe haven for investing in bonds.
Yeah. The other thing is, our state bonds, municipal bonds, safe? And the answer is they're not as safe as federal.
Right.
They don't have that dollar guarantee, not FDIC. They don't have the assets, so that might not be backed up. So that's happened in historic past.
It sure has.
So the idea is, if you get that phone call as an advisor, you got to walk them through what they own.
Yep.
That's why many times as clients grow their assets above FDIC limits, they got to understand what else guarantees are out there. Treasuries provide certain things, and for the right investment, that could be the answer for some money.
And there's specific tax benefits. There's tax treatment that we like to go through with our clients. So,
all right, the next call became a meeting, and I think you and I were both together on it. And that call was, should I save for my child in a savings account or a 529 plan?
Yeah.
This was basically seeking advice on what to do. How do you go about answering that one?
Yeah. It's ultimately about what your goals are for your money for your child. Do you want the money to be specifically allocated and saved to college and to use for college or K-12 private expenses that you can use through a 529? Or do you want to have access to that funds when your child turns 15, 16, you want to buy them a car? Then those are the sort of questions we want to ask. Maybe there's a balance of both. We want to have more money in the 529. Oh, well, Paul, actually, I want to be able to fund all of my child's college. Well, if that's the situation, maybe we move all the savings out into the 529. Well, Paul, I only want to cover, as much as I can of the 529. I'm more concerned about being able to give them money as they get older for whatever they want to use it for. And so those are the questions we want to ask because that helps us get to that answer.
Yeah, so saving, of course, we're going to support the idea of saving for your child. The earlier you start, and if you do a 529, all that growth over the years can truly be tax-free if used for qualified expenses. Very good thing to do.
Yeah.
And as you buy, if you're from Maryland, you can get a tax deduction on your Maryland taxes, depending on how you design it.
Yeah, and it also helps with how money's growing because a traditional savings account's not going to grow. It's really not going to grow. It'll grow in minuscule ways versus something that you have invested for long term.
All right, moving on to the next question. This one's number 14. This one's harder. This is you're in a meeting, and we have something called a trusted contact for anybody over 65. And the hardest part, you're in the meeting, you're advising your client, and you realize that they're just not doing well. And there's this trusted contact. And you and I would have to decide when to call the trusted contact.
Yeah.
Have you ever had to do that?
Yeah, I actually did. I had the situation is I used to meet with them at their house down in Phoenix.
Sure.
And then now they've moved to a nursing home.
Yeah.
And it got to a point where she was the power of attorney for her husband. His health was declining. Her health had been declining as well. And so it got to a point where I had to have a conversation with her on, hey, I think it's time we do involve the kids now. Mm-hmm. We involve the kids. And so that was a very hard conversation to have. And it was like me being able to sit down and I could see that what I was saying wasn't being comprehended. It wasn't, It was kind of going in one ear out the other. She was dazing off. There's certain keys that we look at and we take a look at that and say, well, maybe it is time that we involve the family, involve the kids. And that's why we have it in place. Mm-hmm. We also have it in place for if we get calls from anybody that, hey, this is immediately a red flag. I have another client I'm dealing with this now where she had the situation of she had an issue with the past where she got scammed, and that was a big problem. And so the issue was that we were able to get a trusted contact involved for if anything seems like a red flag. That's why we have a trusted contact in place because, hey, this doesn't sound right. This doesn't seem like it's that individual. Then we can call the trusted contact. Yeah,
so the requirement of having a trusted contact, the reason they ask for that is if you're over 65, is for this exact situation and gives you the authority, the advisor the authority to call that person, and you sign a form saying that. That's why they ask for this. That's why we have it for everybody over 65. It's a very valuable thing that's happened over the recent years, which is an excellent thing called trusted contact.
Yeah, and the trusted contact can't transact on your behalf or do anything like that. It's just a trusted individual that you have, maybe a sister, brother, family member that you can trust to say, hey, if something seems off, please contact this individual. And so it's very important to have that.
Our show today is about advisors who solve versus sell. And let's go to our last question today, and that is the advantage of annuity reviews. So people call in and they're like, well, I got my annuity. What should I do with it? I got a renewal. And then we have the ability to review in person or over the phone. We have people assigned to making sure any type of annuity, you review it each year.
Yeah, and that's critical, Brian, because that is something, especially more recently, I just had a situation like this last week as well, where they were sold an annuity from this representative, from this insurance professional, and they never heard from them again.
Yep.
And that is completely wrong, in my opinion. If somebody's trying to sell something to you and here it is, go about your business, that's not an advisor. And so reviews are critical. You might have this annuity, you might have some sort of product that was sold to you before. We want to be able to help sit there and help guide you with what's the best thing to do with it now. Do we move it? Do we cash it in? Do we keep it? Is there a lifetime income rider? Is there certain benefits to keeping it there?
Yep.
We want to help guide you through that.
Yeah, so imagine you're a new client at AKERS Financial Group, and you've been buying from different people, and you have a collection of different investments, different annuities, different places you have your money, and then you look at it and you're just like, well, how do I get this all to work together? Well, that question is why you need an advisor that solves versus sells.
Yep.
And that means that we would actually look at it all. We look at everything and try to bring the answer out of what you already have and then apply it to what you need and what you need to fulfill when it comes to your goals, whatever they may be. So understanding what you have, that's what our role is. And that's what we do many times for people, is guide them from where they are to where they need to be, and then follow it up on an ongoing basis where we just keep meeting and reviewing over time.
Yeah, and that's so important. And that's why we want to be your advisor who solves for you and does not sell. We want to solve what the issue is. We want to solve and basically make it so that when you're winning in retirement, we know that your investment allocation, all your planning, we've done the right planning. And that's what our goal is. We want to be your planner.
All right. So one of the things I learned from Paul this week is that a lot of times when we get to meet each other, we're going to meet more often. And then as we get everything in line and work through, maybe in a year to 2 years, so we get everything set up, the foundation right, then we slow down our number of meetings. And then we review based on what's going on in your life. We could speed up the reviews again as you need more information or things going on that changes. And this financial advisor is someone that's there to answer the call, also there to meet with you and go over exactly where you are. And that's the design of AKERS Financial Group. Paul, thank you for a good show today. Appreciate it.
Yep.
The show today is called Advisors Who Solve versus Sell. AKERS Financial Group. You can go to our website, akersfinancialgroup.com, and check us out right there. Give us a call. I want to be able to meet with you right away. Now, today we covered this Advisors Who Solve, and we do look forward to meeting with you. We want you to win in your retirement by taking advantage of opportunity to begin planning with us at AKERS Financial Group. To schedule your free meeting with one of our team of advisors, go to our website at akersfinancialgroup.com, scroll to the schedule meeting section, and let us know you'd like to schedule your free meeting. That's akersfinancialgroup.com, or call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call on Monday to schedule a free in-person meeting with one of our team of advisors. Start planning for your retirement now. Go to akersfinancialgroup.com or call us at 833-946-7384. Thank you for listening. I'm Brian Akers from AKERS Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of AKERS Financial Group. AKERS Financial Group offers securities through Archedios Capital, an SIPC and FINRA member firm. Advisory services are provided through Archedios Wealth. AKERS Financial Group and Archedios do not share any common ownership. Neither Archedios nor AKERS Financial Group provides tax or legal advice. Advice given on winning in retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, and or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment. Examples and scenarios shared are meant to be for illustrative purposes only. Past performance is not indicative of future results.